Hello, 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 everyone. Happy Friday. Everyone should be glad this week's over. From both the bullish and bearish perspective, there's just been a lot of volatility. Hope everyone survived. The double top ended up playing out nicely. Let's see. George thinks the June low will hodl. You had to put in hodl. We now favor the retest of that low. And by the way, if I seem a little tired, I am. I just got done recording the Futures Edge podcast with Jim Iorio and Bob Iacchino for the last hour and a bit. So you'll see that drop on Monday. Stay tuned for that. But that's why this is the third live stream plus the podcast plus the trading and analysis does tend to take a toll. That's why it's 8 espresso shots in. Good evening, Anissa. Thank you for joining us. Mama Mia, crazy market. It is a little crazy. Hi, Mike. You were right about everything. And as much as I'd like to take credit when it's right, the thing that I've done right, I know there's another comment. Mike's always right. Well, I'm not always right because the probabilities aren't 100%. And I've been following this channel for 2 years, and I appreciate those very nice comments. The thing I have done right is research, and what I preach here I use, as I've talked, probabilities as a catch-all, but you put expectations, positive trade expectations, in your favor over the long run. It will work out. That's what I want people to take away. Just like when a trade doesn't work, is Mike wrong? No, the trade didn't work. Look, not every trade works. Not every signal works. So I can't take credit when it's right. I can't take blame when it's wrong, and that's not passing the buck. It's the probabilities. There's going to be X percentage of things that don't work. Now, what everyone can do here is learn how to put the price action and the probability slash trade expectancy into their favor. So you are paddling with the current, and you will over time be focused on the right things and make money. That's what it's about, and that's what I want people to take away. Now, if you'd like to give me credit, then fine, I'll take that. Again, I'm joking. Thank you, everybody, for tuning in. Oh, everybody knows me too well. George, Mike, I'll say it for you. This was not capitulation, and it was not capitulation. We actually talked about potential capitulation set up for the podcast because I'm going to let everybody know we are set up next week for potential capitulation again, based off price action and market internals. Again, that's a potential setup. Does not mean it has to happen. All right. It's like preparing for, really bad weather. They could call for, hey, we're going to get it's a tornado watch or something with potential hail. You might just get a really bad rainstorm. It might even miss you. Chicago weather is crazy. They literally, I have storms a mile away from me that they have hail and torrential downpours, and I'm like, it drizzled at my house, or vice versa. So because you have the potential doesn't mean it has to happen, but you prepare. You prepare for it. So it was not capitulation today. Again, I don't need to put that. Thank you again for those nice comments. Patrick, good afternoon. Hello, hello, Christoph. You're becoming a regular. What a week. Oh, boy. Sterling, you had to end Friday with today was a real bear. At least, the other thing I hope everybody's learning is hopefully you can use price action and be able to map out a roadmap. Be able to wrap up. Do you see how handy knowing stops and targets are, or key levels are ahead of time? Do you see how much easier it is to navigate? Again, doesn't mean it always has to be right, but do you see how much easier it is to navigate? I'd actually like some feedback on that, because that's another thing that's I found very beneficial in my own career is having a roadmap. At least you go into something instead of going into panic mode. What do I do if prices hit here? Well, now we roughly know. I need some Mexican food. My stomach hurts. Actually, Actually, I love Mexican food. I haven't had Mexican food in so long because I can't right now. Uh, as I talked the other day, I'm wearing a CGM and tracking everything in how my body reacts to every piece of food I put in my mouth. Ah, for a few more weeks. Actually, for a little bit more. I'm not going to ruin the holidays. You're an oddball in that crew because you don't have a vowel at the end of your name. Who? Oh, I get it with the podcast. Yeah, Jim Iorio, Bob Iacino, and I'm Mike Arnold. Yep. Yep. Thank you. It took me a minute. 8 espressos. I thought that was I was the only one who drank that much espresso. Is there enough beans? You know what? I will defer the beans to you if there's a crisis. I will no, no. I will not be selfish with the beans. I have had to stock up a little more. I have my uh, I have my whole espresso maker. I got 2 quadrants filled. It grinds the beans right then for me. Uh, it's a big Jura thing I've had. Oh boy, fantastic, fresh espresso. Fantastic. That's the only way I can do it. Hello, hello, Amit. Crazy how we were back to where we were last Friday. Well, I guess those unemployment numbers for the Bears didn't disappoint. If you're teaching this Friday, could you teach again briefly on the tick and not trend, trin, TRIN, and their application and significant? I don't know if I can do it today. I am really worn down. Doing multiple live streams and podcasts and everything does, plus everything that goes on during a trading day, does it wears me out. I mean, maybe everyone here has more stamina than me, but 3 live streams and recording a podcast on camera, and you don't know. I mean, people wonder. I've got asked this question: are you prepped beforehand? No, I don't go into any podcast. I don't know, even though Bob and I are partners in Path Trading. I don't talk to him before the podcast about what we're going to cover on the podcast. Besides, hey, is there any specific market you're going to want to touch on just to make sure the charts aren't a mess? Other than that, I know no questions that will be asked. I don't know specifics. So it's real time. Everything's real. I don't know what Jim's going to ask. I don't know what Jim Ioria is going to say. Nothing's prepped. I don't have, it's not like, here, ask me this, ask me this. There's no prep for that. It's just real time. So what you see is literally, besides the some editing that I don't do that goes on behind the scenes just to edit out, coughs or pauses or something else. You got to be on. At least hopefully I do a good job at that. So, that's why it gets a little, and then there again, there's no editing in these live streams. It's what you see is what you get. So I don't know if I can go through that, but we will do more of it, Jake. I'm just a little worn out. Did the SPY close? It's 63.8. Well, the level we follow is a 62.5. And the fib level is 61.8 if you're using the fib levels. But the 62.5, and yes, it did. And I actually don't know for the SPY. I was focused on the futures. I will have to go back to the spiders because I was focused on the futures, not only for the podcast, but for end of day today, because there are higher probabilities with the futures versus the spiders or the Qs. We'll have to do that at some point. I appreciate the feedback. Thank you. That Fed pivot, the Fed's not going to pivot, please. We're doing the 75. All right, that's a good tie-in real quick. I'm not going to go through all of next week. Just a reminder in case you can't tune in Sunday. Next week, there are a couple things. We have, on the 13th, we have inflation, CPI and inflation rate. So keep that in mind. Which is next what? Thursday? I forget it. That's Thursday, right? And then the 14th, we have retail sales and consumer sentiment preliminary for October. But the big thing everybody will be focused on for next week is CPI on Thursday. Yeah, Fed meeting minutes on Wednesday and PPI, which will take a back seat to CPI. Pretty red day, very little area to hide. Mega caps got beat up. Funny, profit taking in some oil, even though oil ended up pretty strong today. I did go through a lot of thoughts on oil on the podcast. Nearly 80% for that 75 basis points. I don't think, and we had more Fed speak today, I don't think anything's going to deter them. Even if the CPI numbers come in a little better than expected, I don't think we're going to see anything other than 75 basis points. And we're still, of course, in negative gamma. Fear and greed back into extreme fear. We'll cover that more this weekend. So let me get back to when people stop buying the dips or give up buying stock, capitulation will happen. Well, that would be long term. Yes, once I start seeing, probably once even the viewership goes down on this channel, more people will be fed up. Although I think we have a pretty solid viewer base of people that really want to do price action analysis, bullish or bearish, and aren't just about the where's the dip, where's the dip, where's the dip. But once we start seeing those dip buyers go away, we will be closer to a long term. The potential capitulation next week would be for a short to medium term, especially going into November. We could see a capitulation low put in October, which could give us a decent rally. By the way, also, I'll go over this. I was actually, as I joked about on the podcast with Jim Iurio, I said I don't normally pray to the market gods, but going into the podcast, I'm like, can we at least hit 36, 33.75, which was the next harmonic after the double targets? I have the double, hold on, the part of my screen. It went off the screen. Hold on, just making an adjustment. Sorry. That's good enough. I'll fix it more later. I was saying, can we at least get to 36, 33.75? Why? Because that would set up, at least from price action. I cannot put out something that is not done. And you see, we hit 36, 32.50. Reversing there, that gives me a potential bullish setup for next week. Even if we head down lower, now we close below 62.5. So probability-wise, we should still see a retest of the end of September, beginning of October lows. We should still see 36.02 to 35.71. Not guaranteed, but for probabilities, we should still see that. Although, even if that were to happen, we have the targets would change a little. I had to give out the conservative targets on the podcast, so they'd go a little more. They'd change. However, it would still be a reversal trade, and that's only on the daily close above the 38.20 highs. That being said, based off market internals and price action, we are set up for the potential capitulation move, and that could potentially take us easily back below 34.77 area. Should we break below 35.71? Also remember, we're closing rapidly in off the bounce off that 200. So that would get very interesting from a systematic buying perspective, because I don't know from, although there were a lot of systematic buys that went off with that reconnection in the S&P with the 200. I don't know what the official stops are, but if it's a short-term bailout below a certain level below that, it could lead to more accelerated. So we are a critical area, sound like a broken record, going into the beginning of next week. I don't think we're going to sit in this area very long. We got CPI, so it may be just a little bit. I don't really see it. We're either it's gonna make it some kind of decisive move. So next week's another critical week. Broken record. Daily cycles rolling over. All right. Hey ho, waka waka. I'm glad your shorts printed. Also, people want to know how you can trade this stuff, even if you missed a longer term entry signal or something else. You can trade intraday using your. Remember, larger targets have weight. So this could easily have been traded. I came in this morning, watched the 15-minute rotation zone, little reconnection, and then just riding. You know how I love to watch 8 pushing the price. And all right, key little reaction off the second target, coming back to the 15-minute. And I said, watch that going into European close. Then just draining out lower. After we got below that 62.5 and final target, the next target was that 75, which we bounced off of. So we'll get to longer term things going in on Sunday. Not going to recap all that now. This was controlled selling. This was controlled selling. There was not even short-term capitulation today on the tick. You can watch for bounce plays. Especially I start watching for, again, you're trading, you saw this was a trend day, a strong trend day down. However, you can start watching for those short-term bounce plays with the spikes below 1,000. Okay, the big I mentioned this morning, we had the sell program right off the open, and that's where you see this. That was definitely a sell program off the open, but this was just constant selling pressure. There was nothing. If we start seeing stuff like this throughout, there wasn't even a key. That's why I have this 1,200 line. If I start seeing major pushes below 1,200, that can be a significant capitulation move. And we didn't see that except for right around the open. This was orderly selling. All right. So that's one thing you got. That this was no extreme day. I know I was asked about the spiders. The spiders. Here's your key levels. I do have on the chart. You filled all the targets from the spiders. You filled the gap, and you did close below the 62.5. You almost hit that 87.5 on the spiders. Yes, you also have the potential double bottom on the spiders, that which never has to trigger. But you're closing in on that low area that really has to hold the beginning of next week, and it does favor a little lower price action still in the spiders. And also remember, this is a gap left behind. This is a gap because you closed here, you opened here, and you never back traced it. So there is still a potential gap play for the October, or really the final Friday lows. But that's a break below those Monday, October lows. So that's a magnet for next week also on lower prices. Waka chiming in was very controlled selling. This wasn't panicked selling. All right. Thank you, Jake. Good afternoon, Davey. Yeah. We're going to keep seeing the pivot B. I mean, now, again, since the pivot BS isn't working, what are we seeing? What's secondary to the pivot BS? Fed's going to raise their core target inflation rate to 3 to 4%. That's also I'll call that the new pivot, since the pivot isn't working. Now the mantra is, well, they're just going to raise their core inflation rate, which I've talked about before. Hell would have to freeze over before they do that. I haven't think an inflation rate of 2% is too high. But that's the new pivot talk. So, Don't ever say road mapping is boring. I get excited about price target. Explain to my wife and look on her face is okay. Maybe that's not a good example. My wife roll is just like, oh, please stop with the price. I'm like, you know what price did? You know what the targets did? She's like, I don't want to know. I don't want to know. I get excited over price action, but that's just me. Uh, let's see. Fed minutes out aren't till Wednesday. Waka waka. Thanks, Jacob. Hey, I know I've asked in the past. Can you show on how you measure out the double bottom with the retracements? Again, it's right here on the chart. For the retracements, it's got to get at least below the 75. At least below the 75. People are wondering, well, why isn't the 87.5? Because the bare minimum tested out better at the 75. Yes, a stronger bottom is below the 87.5, but the bare minimum I will use is below the 75, which hit. So you just do from the right side base to the peak, it has to pull back at least below the 75. From today only red. What? Don't tell me, Boba. You're the inverse Tom Tom. No, we will not have red days only. Please, please don't. Let's not do the other extreme. So please, no, we're not going to trade zero, and we don't have red days only. Long term, the trend is still down, but that doesn't mean we have red days only. And there might be trades. Remember, this is where don't get blindsided. It's why we map out. We got to go with the probabilities. So does that mean we have to have a bullish rally? No, but we have a potential. It might disappear. We might get a capitulation move next week. Theoretically, it's set up for it. Does it have to happen? No. So I'm listing the two potentials. I don't think it's going to, I think surprisingly it might not be calm, but it doesn't matter what I think. We got to trade that. Yeah, hit the like the mic button. Hit the like the channel button. Whoa, Tesla? Oh, by the way, the VIX, just for the point, remember? Because people said today, the VIX, it's going to 35 to 40. I'm like, no, it's not. Yeah, it is. We're selling off. I'm like, no, it's not. We have targets. Here you go. What's the targets? The first major one is 31.66, especially with the declining price. You see spiking up above it. The next one was 31.85. Boom, boom. That's done. That's why it wasn't going to 35. We weren't in crash mode. We weren't in anything else. This was orderly. And look, double bottom in the VIX triggered, along with the double tops triggering, and finished even for trading. That's where your analysis. That's why it's handy to have your roadmap. So you have even targets for volatility, and you see they're not trying to call the exact stopping point. But you know what? Retest, 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 and then the rollover with the short covering into the close. Tesla. 222.81 was the next harmonic, and I'm still expecting this 220 area. What's the exact target there? 220.33. Not that we care about the exact target. Trading post-market down. We might even trade pre-market down there. Does that mean the lows have to be a no? Anywhere still between that and the June lows, we could find a bounce. Longer term, still expecting Tesla to break. This is the key area. We'll watch for a short-term bounce. By the way, the next targets on a break below the 206 area is 194, and then majors 180. And the 180 is also key from a price action because those are the lows in March and in May. Really key that we're watching for is 163.11 based off the post split price with the weekly 200 coming in here. That's just your longer term because you get a close below that. Oh boy. Who is the target of 60? Theoretically, you could see it off that close below at 163. I know I saw somebody having a target of 60. You're going to see before this bloodbath is over at Tesla easily reconnect with the 200. I'm still targeting lower. Boba thinks capitulation is on the way. You could get capitulation way before NASDAQ hitting 8K. That would be a long-term capitulation. Next week, NASDAQ capitulation is around 10,350, 10,400. That's the first area for capitulation. So that's what we're going to be paying attention to going in. If we do get a capitulation move, you're not going to see. I mean, we'd have to have some, and we have the potential for nukes. So I think we'd have to have some nuke potential or some horrible actions taking place in the world before you saw 8K. And I don't want that to happen. So that's a long way off. That would be longer term capitulation. Shorter term capitulation is still above 10K. They're not going to make a big decision, even if the CPI. They're not deviating. Yeah, we know your price target. At least it's not zero waka waka. Did Bitcoin temporarily bottom? I don't have a bottoming signal yet. We just had that double top, which hit the first target. I don't have a bottoming signal yet. So, and long term, it's going to still trade with the market, but long term, we have not hit a key bottom. Short to medium term, we'll trade with there. We don't even have a strong reversal signal. There's no even percent B buy based off today's price action. So I don't have anything. Probabilities still favor a little more contraction going in next week. Back down to test that 19K area. But I don't even have now we could get another signal before Monday, but I don't have anything from the bullish side. It's diverging a little, but it's still, if stocks get hit, if we get a capitulation move in stocks, you should see Bitcoin retest the lows back from June. Bitcoin still trades more as a risk asset than an anti-dollar asset. Chris, I was comparing my chart with yours. It definitely helps me fine tune it. I'm curious though, what does capitulation look like on a daily chart? I'll have to find a daily capitulation move. It can be over 1 or 2 days. If it's a 2-day move, it's a close near the lows on a very red, wide range day. There's some stuff I can't release because I'm not the only one that developed it. And then you reverse most of the moves the next day. On a 1-day move, you get days like this. I'll show you what your day would look like for a 1-day move. Would look like something on the 24th of January or the 24th of February. Those are like your 1-day where you just get a flush out move and then it's just massive buying. That's what a 1-day looks like. A 2-day, although not exact, a 2-day looks like this, something like this. Back from June 18th of 21 and Monday. You see how this wasn't technically a capitulation move, but it looks like this. This wasn't technically, but you can have days, if it's a 2-day, you're looking like something like this. A bloodbath on one day, the next day. So if you added these together using candlestick math, it's going to look like a 1-day candle of a capitulation move. By the way, for those wondering, you don't have a multi-day capitulation move like this. That is not. That is just a bottoming move. And capitulation just isn't based, from my perspective, on pure price action. Here's another example. Now, this was a capitulation move, even though this ended in a doji move. This was with internals and everything, and then this day, and this was a 2-day capitulation move. And people will say, this day predicted this day. It didn't exactly, because you could get another down day like this. So this was the day that confirmed the capitulation. This set it up for a potential reversal. This was the day that confirmed the capitulation. There will be nothing spared when we eventually get the flush out. That's what's going to be fascinating. I'm not going to get through all the comments here. The probabilities say a retest of the June lows at this point. The June low area. It doesn't have to happen on Monday. No, it's completed by between the 87.5 to 100. Some stop at the 75, but that's not the higher probability. The 75 is just the potential target for a double. The higher probabilities, which is what I use for the target areas, are between the 87.5 and the 100. So why the 87.5 is so handy. Let's see. If something works for you, then fantastic. I don't try to make clones of me. I just do what I do. And you'll notice, as we talked about the other day, there's not the new magic indicator of the week. I for longer term stuff, for day, yes, I do look at the McKellen oscillator. Yep. I also look at the trend. I also look at advanced decliners. There's a number of things that feed into the longer term stuff. Yep. They did, until I said, Coco, what did I say? What would happen? What I caveated this. I know. Go back and watch it. I said they prefer unless the double triggers. What happened? Go watch it. What happened once the double triggers? And I said the front run thing, I showed the rollover pattern, and then it triggered. It did favor until the double triggered. That changed the probabilities in the short term. And then go back and watch. And then what did I say for the end of day? If we close below the 62.5, then it favors the continued price action down, because we didn't have to close below the 62.5. Here it was. Remember, I said we could hit 30, the target, and still close above the 62.5. Did we close below the 62.5? Yes. So the probabilities still favor further down. Why did I want to hit the 75? Because now I have a potential double bottoming pattern that I could talk about on the podcast. But this shifted the probabilities. Now, this, if you were waiting for the close, it was too close. It hit the first and second targets. And I said the probabilities needed to shift based off this little move, based off the close. Could it be front run, as I told you? Yes, on the rollover play, as I went through this morning in the live stream. But then if it wasn't going to close below here, it was no carry on. Now, once you got to a certain point, unless you had something horrible happen, it was going to close below there. So until this triggered, the probabilities in the S&P favored continuation the upside. Once this triggered, they favored continuation the downside. Once it closed today below the 62.5, now it favors continuation to the further continuation to the downside. Does that have to happen? No. There's only a 70% probability, actually slightly above there, for a continuation to the 3,600 area. But I'm put my odds with the 70%. Also, this is, yes, AMD. I did not get to bring that up this morning because we were talking non-farm payrolls. What happened with AMD? Further guidance. You're going to see a bunch more of this. Also, that's why I talk about, even in the sector overview with the semiconductors, are we at the bottom of the pattern? No. So you have to be careful in the semiconductors. And then watch out if you close below the 62.5. Because you're going to see, and you're going to see more of this going into earnings season. You're going to see more of the earnings misses or the shock guidance moves. That's why I hate fighting a long-term pattern, because you have the downward pressure and then you get the surprise things like AMD. But it's already been in long-term sell mode. So let's see. End phase, longer term level, please. End phase, your longer term level, I'm watching for at least a return to 218.65. Let's see, I can't go through back to AMD. Earnings is coming up. I think we're going to get some kind of flush out move before earnings. The next major target is 48.39 to $50 area. And that's why you have some key area. I didn't mark it off, but you have some key support coming in right there. So that's my next long-term level. Does anybody here trust CNBC? By the way, back to AMD, your 7160 area is now key resistance. 7160 to about 74 on any rally. I work at Is that Southwest Airlines? Could you look at Love? Well, I guess if you're looking at Love, you work at Southwest Airlines. Uh, uh, I mean, you're still looking at 27.75 as the next key target. Why? You closed below the 62.5 back in June, and you couldn't get above your weekly rotation zone. So 27.75 to 22.47 is your intermediate target area to watch for a potential bottoming pattern. So that's where it sits right now. Would not, there's anything short term. I mean, yeah, you could have an aggressive buy. Actually, it didn't, there is no aggressive buy based off this week's price action. Last week would have been on a weekly close above. With this week did not happen. But any buy signal would be a watching for a rollover in the weekly rotation zone again. So there's no long-term bottoming signal yet. It's trading against key resistance. The other thing I keep in mind on the next rollover, you have a leftover gap fill to 28.87. Would not ignore that. Is it more than 5? What is what more than 5%? There's a number of things that go into a capitulation move. What exactly is a capitulation move? It's when, well, you get, it's like flushing out. I call it a medium term flush out move when you get people throwing in the towel. Essentially, it can be with a lot of stops being hit, people throwing in the towel, margin calls. So it's a wide range move with a spike in volatility into very poor market internals. And it's a medium term bottom move. Yes, can you eventually have a long term one? Yes, this would, if we had a capitulation move, it would most likely not be the long term one, it would be a medium term one. Sir, I just start new, so if you're new, this would not be the market to start buying in yet. I would be learning now, researching and learning and waiting for a long-term pattern to keep my target or my powder dry. So I would not be looking for anything this is the tactical trading, not a long-term investing market. So for beginners, this is not the area. For beginners, if you needed to put your money to work, same stuff that we're doing with part of our cash is you can put it in short-term treasuries, in the US, or whatever short-term treasury investment. I like US short-term treasuries because it keeps it relatively liquid and pays, compared to for the last few years, pays decent interest on a short-term basis while I'm waiting for longer term investments. Other than that, it's all tactical trading, which is what I would not recommend for any beginner. This is not the market to learn to short-term trade in. Yeah, the market can skip the June low retest and move higher from here. It could very well do that. I'm saying just because all right, capitulation setups don't happen that often. Does a capitulation, remember a week or so ago and before I said we were set up for capitulations. Do we have one? No. Just because you're set up does not mean you'll have. So it's like a tornado watch or warning. I forget which one's what. It's one that hasn't been cited yet. or they haven't cited it. It means conditions are. Does anybody watch the Weather Channel in the U.S.? You know they have Torcon. You know, they list Torcon, and it's 1 through 10. And it's roughly the probability. So a Torcon 5 is 50%. Torcon 8 would be 80%. Torcon 1 would be 10%. Is that guaranteed you'll have a tornado? No. Does it mean, what is it? It means atmospheric conditions are suitable for one to potentially form. Okay, and the higher the Torcon value, the higher the probabilities one would form. Is there a guarantee? By the way, I've never seen a Torcon value 10 because that would be 100% guarantee, and I don't know if there's conditions that are 100% guaranteed for a tornado. So we have capitulation con is registering at a higher level, so we could potentially have a capitulation move. We could get through next week without one. We could get through this year without one. Thank you, Anissa. All I say is patience in trading high probability setups like doubles and 62.5 or test high lows improves my returns tremendously. And that's the name of the game. And that's what you do at the end of the day. And you don't worry about being right all the time. You put the probabilities in your favor. You are welcome on it. My nephew saw me trade today and said, I can just trade, go on TradingView and use indicators. It tells you when to buy and sell. Oh, boy. Yeah, what, hey, Waka Waka, can you tell me what that magic indicator is? Because then I can get some more rest. I'll just put it on my chart. Oh, is it 100%? Oh, boy. My daughter watched me trade too, and she wanted to borrow 50. Hey, kids can make better traders because if they view it as a video game. Just make sure they understand it's real money. But, you know, because kids are very good at spotting patterns and amplifying them. So, that could be, yeah, you go train your kids to be, your kids might outtrade you. Then just put them to work and you can take the day off. If I said June, I meant October. Well, which one? We haven't tested the June lows in some stocks. If I was talking about the indices, yes, we've already tested the June low. Or do I mean the October low? Yes. If I said June, I misspoke. All right. I'm going to skip a bunch of stuff. Yep. The crap is here. It's a TomTom indicator. Just buy calls and go to sleep. Is there a TomTom indicator on? I never searched for that. Hold on. I got to do my search for my indicators. Let's see. TomTom. There's no TomTom indicator. How about... No, there's... look, we got a high accuracy indicator. We might as well just use that. Look! Fibonacci Bollinger Bands. Guaranteed. We got something that's guaranteed, everybody. Let's see what the guarantee is. Guaranteed to make money. Here's all you need. It's guaranteed. That's all you need. There you go. We found it. That's all it took. Guaranteed to make money. Everybody, I'll see you later. The channels, I'm wrapping the channel up. We found something that guaranteed make us money. So you don't need to tune in anymore. We're done. I'm starting Ender's Game, Stock Market Edition. I love Ender's Game. That was a fantastic book. Stock Market Edition. With my Hey, that could be fun. Ender's Game Stock Market Edition. If only you could program, say, didn't know they were trading stocks, but it mimicked price action some way, and you gamified it. Huh. Then just sit them in front. Dad, do I have to sit in front of the computer for 8 hours a day every day? Yep, Monday through Friday, 8:30 to 3 p.m. Central Time. Monday through Friday. Forget school. You're in front of the computer. Play your damn game. There you go. So that's the new way. Somebody figure out. There you go. I've solved the. So everyone with children, that's what we need. We need the Ender's Game Stock Market Edition. I don't have kids though. I don't think my dogs would make good traders. So I'm out of luck. Oh well. All right. I'm gonna wrap it up. Not seeing anything else today. Everyone, what what did I miss? I missed a comment. I missed a comment. Obviously, I missed a lot of comments. So I'll just leave it as that. I hope expect a long and ugly recession, says expert who predicted the 2008 financial crisis. I think we're going to see long term a lot of blood in the streets. Long term, a lot of blood in the streets. Don't know if we're going as low as Waka Waka thinks, but I think we're going substantially lower long term from here. Oh, he said we need a Pelosi indicator? That's why. Well, it also makes you have a Porsche, doesn't it? Uh, with that, everyone have a fine, fantastic weekend. I will be back on Sunday. I need to get some rest now. It's been a long day. Isn't that a personal question, Coco? Why don't I have kids? I can't have kids, luckily, for this world. No kids for me. That's why I have 5 dogs. 60 to 90 days delayed. Everyone have a great weekend. So now you know even more about me. No soup for, yes, no soup for me. It's okay, Coco. I rescue dogs. It's fine. I probably wouldn't make a good parent anyways. I'd be talking to, oh, what's the probability of this, and I drive my kids crazy. They couldn't wait to get out of the house. I drive myself crazy, so imagine the effect I'd have on kids. It's probably a better thing. There we go. The bloodline ends with me. No, well, the name ends with me, and I rescue degenerate stock traders. I try to put them on the path, the correct path. Enjoy the weekend, everyone. I will see everybody back who can attend on Sunday afternoon, 3 p.m. Central. Until then, bye for now.